Hello and welcome to NDTV Profit. You're watching IPO Adda, and the company we are discussing today is Orient Technologies. The company is coming out with an IPO which opens on August 21st and closes on August 23rd. Price between 195 to 206 rupees per share. It's a issue which comprises of fresh issue of 120 crores and OFS of 94.8 crores. So a total issue size of roughly 215 crores, and that gives the company a market value of nearly 858 crores at the upper end of the price band. And joining me today is Mr. Ajay Balram Sawant, who is the chairman and managing director of the company. Mr. Sawant, thank you very much for joining us on NDTV Profit. To begin with, sir, can you take us through your business model? You are into IT solutions providing business, but what exactly do you provide in this segment, and who are your major clients?
Okay, thank you for inviting me on NDTV Profit. It's a privilege to be there on the NDTV Profit and addressing our Orient Technologies IPO. First and foremost, let me start that we have started this organization way back in 1997. So it's more than 25 years of service that we have been giving to our customers. When we started with the end user computing, and over a period of time, we started moving into the data center solutions, IT technology enabled services, cyber security, and nowadays we use the cutting edge technologies like cloud and digital transformation, which is more of a cloud management perspective, data management perspective solutions and services to the customer. Our core focus is all about services, and we provide services to our customers like Coal India, Mazgaon Dock Limited, GST network. They are from the government segment, and there are marquee customers from the banking and insurance perspective. Few of them are from the healthcare, pharma, and other retail and education perspective as well. So we have mixed bundle of customers which are into the enterprise space, government and public sector, as well as mid-market space as well.
Give me a sense of when you say that you provide IT solutions to data centers and other enterprises, how big is this business for you? And and you're not an IT services provider, it's a solutions provider. So what kind of margins do you work on?
So currently, FY24 numbers, if you see out of 603 crore that the revenue that we have generated, 52% comes from our IT infrastructure solutions and products perspective, and that's a big business that we are concentrating on. Of course, the margin varies between 8 to 12% in this particular business, but it's a more of a eye-catching business which spreads across the customer. Every customer needs it, and that's a basic need of a customer. So we continue to do it since 1997, and we have expertise in terms of virtualization, in terms of backup, in terms of data center solutions, where we do a lot of core banking and ERP application perspective. We provide the complete landscape to our customers.
Two things which I just want to understand, that you have a big relationship with Dell and also with Fortinet in the cyber security space. How big are these relationships, and how does this relationship work in terms of revenue generation for you?
So with Dell, we were the first partner to sign up. Dell is generally a direct marketing company. In India, they came with the channel model, and we were the first one to sign up with Dell. Same thing was with Nutanix. We were the first one to sign up with Nutanix in India, and FortiGate also, we were the early partner to sign up on the Fortinet front as well. So these relationships are growing year on year. For Dell, we are more than $10 million relationship that we are having in last financial year. Last financial year, I believe, we have done more than $13 million business with Dell.
And what kind of services that you provide Dell or Dell customers?
Yeah, with every products and solutions that we are associated with, we bundle our services, which is more from the managed services perspective, more from the, if it is a cloud, it is a cloud services. We called in our organization OMS, that is Orient Hosted Managed Services. So we provide those kind of services to our customers where they get the complete end-to-end support. What we say is right from procurement till the retirement of the services we provide to the customer. So as to say that once you procure the product, we do the rack and stack or implementation of the products and solutions. Then we manage it throughout the life cycle of the product. And then at the time of retirement, we do even a sustainable services to our customers. So that's the complete end-to-end services we provide to our customers. And that's our focus.
You spoke about the fact that the margins in your business is normally between 8 to 12%. If you look at your margins for FY24, it's around 9.4% or so, EBITDA margins, which I'm talking about. Is there enough scope to build upon these margins to go to the band which you spoke about, the upper end of the band?
Yeah, definitely. The reason being, there are three lines of businesses that we have. One is IT infrastructure, products and solutions, which we talked about, where the margin is 8 to 12%. But as we go to the second line of business, which is IT-enabled services, which gives us more than 25 to 35% margin. And the third line of business, which is a new age technologies, which we talk about, like cloud and data management, where the margin is between 15 to 20% margin. So overall, if you see, the gross margin is around 18%, and the EBITDA margin, you can say, is around 9 to 10%, which we produce.
How do you look at cloud managed services which you're providing? Because you said it has higher margins of 15% and above. How do you look at scale up happening in that segment?
So adoption of cloud is increasing day by day, and it's not only in India but the worldwide. People are adopting more and more cloud infrastructure. So we used to provide more of a on-premise infrastructure to the customers. Then we provide the virtualized infrastructure to the customer, and nowadays the adoption is increasing in terms of cloud. So that's a journey, and that's where we find that the cloud is something which is a new age technology. People are adopting it rapidly, and trust me, it's a growing. Every customer, whether it's a BFSI, whether it's a pharma, healthcare, whether it's retail, education, everywhere it's growing. Even the public sector are adopting cloud, and it's going to grow over a period of time. You get any report from IDC or Gartner, you will see that yes, cloud is exploding, and that's where we are feeling that yes, cloud adoption, we are concentrating more and we are increasing our business. If you see my last 3-year revenue, we have grown 250 to 300% in 3 years in cloud business, and that's a very phenomenally growing business with the better margins.
So today, if I see your revenue profile, your IT infrastructure is more than 52%, which is there, and remaining between the other two businesses. So when do you expect cloud to have a majority revenue coming into your revenue stream?
So if I see the March 24 numbers, 52% is come from IT infrastructure products and solutions, 26% revenue come from the cloud and data management, and 23% is coming from IT enabled services. So if you calculate this, our growth over last 3 years, cloud is the maximum. Second is of course IT enabled services, and third is where we are seeing that though we are degrowing in percentage perspective in IT products and solutions, but the value wise IT products and solution will be the same.
Give me a sense of how you're managing your cash flows, because you have a very high trade receivable days. If I'm not wrong, it has gone up to 157 crores at the end of March 2024, and it's been growing. And I think you keep between 30 to 120 days, if I'm not wrong. So how do you planning to manage your receivable days, and how do you want to plan to bring it down?
Okay, as the margins keeps on becoming difficult to get, naturally the cash flow management becomes a key thing in our organization, and we are completely focused on that. So first and foremost, though the cash flow DSO is more than 150 days, it's primarily because of the long-term contracts that we have with the customer, which are milestone-based payments. So our contracts are milestone-based, so naturally the payment terms are milestone-based, and the invoices generated will show you that yes, the outstanding is for the longer duration of time. But actually, organization is generating cash every year, and if you see the balance sheet, we are a cash rich. There is a huge reserve and surplus which is there in the balance sheet. So we are hardly debts, and that's the debts which we take it against the BGs, performance bank guarantees, which we have to give it to some of the government and PSU customers, or the tender situation. Otherwise, we do not take debt for our managing day-to-day cash. So, for managing day-to-day business, we don't need cash from a loan or any other perspective, and we use our share capital only to manage day-to-day cash.
Can you give us a sense of what is the kind of order book that you're sitting on?
Yeah. So currently we have, by 30th of June, we have an order book of 102 CR as of now, which consists of long-term and short-term orders. 70% are the short-term orders, which we'll be billing it in next 3 to 4 months time, and the balance will be by March 25. We should be able to bill it.
Is it a normal thing to have for you to keep only two-month order book, or do you plan to increase this order book going forward?
So IT infrastructure products and solutions BU will have an order book which will be built within 2 to 3 months time. Cloud is a long-term business. Services is again a long-term business where our contracts are between 1 year to 3 years.
Okay. You're raising 120 crores. Can you give us a detail of how you're planning to utilize that amount?
Sorry, I couldn't able to hear you.
I'm saying you're raising 120 crores in
yeah,
fresh
can you
capital.
just repeat the question?
How do you plan to use this 120 crores for your various usages?
Okay. So the IPO proceeds that will be coming as a fresh issue to the organization is of around 120 CR, which we are using it for our business expansion plans. So with that money, we are setting up a huge SOC, and we are expanding our NOC. So SOC is our security operating center, and we already have a NOC in MAPE, but we are going to integrate NOC and SOC solutions together, and which will be able to give services through that, security services or managed services, various kind of services to all the customers who will be spread across the globe.
Mm-hmm.
So geo expansion is one of the
yeah, go ahead, please.
yeah. So geo expansion is one of the priority, and yeah, geo expansion is one of the priority for all of us to make sure that we are growing rampantly.
Mm-hmm. You're also entering into a new line of business, devices as a service. If you can give us some details about it.
So on a device as a service, sure. So on a device as a service, what we are trying to do is that as our LOB number 1, which is IT infrastructure products and solutions, our margins are slightly getting reduced. So we are trying to convert that business from a CapEx to OpEx-led business. And what we are going to do is that we are going to add those devices along with the software and services of Orient. We will be bundling it and giving it to a customer as a completely IT as a service. So device as a service will make sure that my CapEx business revenue will move into a services revenue where the margins will be better.
How do you see your infrastructure business growing considering the fact that you are tapping the data center business, which is growing rapidly, and what kind of growth rate that we can see in that segment?
So in our RHP, we have filed, CRISIL report, which says that currently from FY23 to 28, IT infrastructure products and service, solutions business will grow at a CAGR of a double-digit number.
Okay. My final question to you is that, if I look at your order book, 30% is coming from government orders and 20% from others, BFSI. That a normal trend that a large portion of orders comes from government, or it changes as we speak?
So primarily our focus is more into the BFSI and the healthcare and pharma, IT/ITS customer, retail and mid-market customers. Government and PSU, lately we have focused onto it, and as government is spending lot of money in digitalization, we thought that's the right segment to go on. So last couple of years you will see that yes, our government revenue has increased, no doubt about it. But we are trying to maintain it between 15% kind of overall numbers, but the numbers will grow definitely. Overall number will grow, so as per that, even the government and PSU numbers will also grow.
It was a pleasure talking to Mr. Sawant today. Your IPO Orient Technologies is opening on August 21st, closes on August 23rd. Price between 195 to 206 rupees. It's an IPO for 215 crores, which includes a fresh issue of 120 crores, and it values the company at nearly 850 crores at the upper end of the price band. Thank you for watching IPO.